Welcome back to another explainer. Look, whenever we talk about the artificial intelligence boom, Nvidia basically takes up all the oxygen in the room. They are the undisputed king, they've delivered absolutely extraordinary returns, and they get, well, almost all the mainstream glory. But underneath that massive success is a vast, hidden ecosystem of infrastructure enablers that most people are completely missing. Today, we're going to change that. So what if the next wave of winners is already forming quietly? Today, we're going to dive into 7 specific stocks drawn straight from our source data. These are companies that have explosive growth potential, yet they're flying totally under the radar. We're cutting through the daily hype to do a strictly data-driven breakdown of the companies that are actually making this AI revolution physically and digitally possible. But before we get into specific companies, we really need to understand the buyers here. I'm talking about the hyperscalers. These are the massive cloud service providers that are just rapidly building out the infrastructure required for training and inferencing AI models. And guys, we are talking about a multi-trillion-dollar spending boom. It's the sheer scale of this build-out that guarantees a massive multi-year runway for the picks and shovels companies we're about to cover. So here's our roadmap for today's explainer. 1. The boom beyond Nvidia. 2. Solving physical AI bottlenecks. 3. The networking nervous system. 4. Software and application layers. And 5. Your diversified AI playbook. Okay, let's just dive right into this. Part 1. The boom beyond Nvidia. The picks and the shovels of the AI gold rush. You know the old saying, right? In a gold rush, the people who consistently make money aren't always the ones mining the gold. They're the folks selling the shovels. Well, while GPUs are getting all the attention right now, an entire hidden ecosystem is absolutely required to actually run them. We're talking about a rapidly expanding space. Memory, networking, power and cooling, testing, custom silicon, and applications. Analysts are projecting that AI-related infrastructure spending across these exact subsectors could reach hundreds of billions annually in the coming years. This isn't just a flash in the pan, it's a foundational structural shift, creating massive opportunities for the companies providing the tools. Moving right along to part 2, solving physical AI bottlenecks, hardware and environment enablers. Let's get physical for a second, because before you can run insanely advanced AI models, you have to solve the immediate real-world bottlenecks of data storage, immense heat, and chip reliability. To understand the memory bottleneck, we have to talk about high-bandwidth memory, or HBM. This specialized memory is absolutely essential to pair with GPUs if you want to achieve massive AI performance gains. And the undisputed kingpin powering this is Micron technology, trading under the ticker MU. As AI models get more complex, memory becomes just as critical as raw compute power. It's a true structural shift, not just some cyclical trend. Just wrap your head around this staggering number. $23.9 billion. That is Micron's record fiscal Q2 2026 revenue, which completely crushed estimates, and it was entirely driven by explosive AI demand for HBM. They also hit an adjusted EPS of $12.20 and signaled their confidence by raising their dividend by 30%. Because HBM supply is so constrained globally right now, Micron is aggressively expanding their capacity. They aren't just riding the wave, they are literally the bottleneck solver. And this brilliantly illustrates 2 other massive physical bottlenecks: heat and reliability. Vertiv is the company solving the power and cooling problem. AI servers generate an enormous amount of heat, and Vertiv steps in with essential thermal and liquid cooling management. Meanwhile, you've got Teradyne handling the testing. Because before any of these high-reliability AI chips actually hit the data center, they have to be rigorously verified. Both of these companies are totally indispensable to the physical AI stack. I want to slow down for just a second to really emphasize this next metric for Vertiv: 83%. That is a massive jump. It represents Vertiv's adjusted earnings increase in Q1 2026 alone, and it's backed by a backlog exceeding $15 billion. The funny reality of the industry is that nobody talks about cooling until the servers literally overheat. Vertiv provides a multi-year runway as these huge data centers scale up. Over on the testing side, Teradyne is seeing a very similar explosion in growth. Their Q1 2026 revenue reached $1.28 billion. That's up 87% year over year. And about 70% of that is directly AI-related. Their total addressable market is rapidly expanding into complex areas like silicon photonics because of one very simple fact: every single new AI chip absolutely must be tested before deployment. No exceptions. Part 3. the networking nervous system, connecting the AI clusters. Okay, so once you have the chips cooled and tested, you have to actually connect the AI clusters together. Data transfer is the absolute central nervous system of any modern AI data center. When you break down Broadcom's Q1 FY 2026 revenue, it reveals an absolute networking powerhouse. That massive $8.4 billion slice, that is just their AI semiconductor revenue, making up a huge chunk of their $19.3 billion total. They're designing custom ASICs for the biggest hyperscalers out there, like Google's TPUs, and providing incredibly sticky, high-margin Ethernet solutions. And check out this standout metric, 106%. That's Broadcom's year-over-year growth in AI semiconductor revenue alone. Because of this sticky infrastructure demand, they have a crystal clear line of sight to over $100 billion in AI chip revenue by 2027. They're a definitive picks and shovels leader that, on top of all that growth, even pays a reliable, growing dividend. Also hanging out in the networking space is Arista Networks. They provide these ultra-low latency Ethernet switches that are specifically optimized for AI workloads, and they grew their Q1 2026 revenue by roughly 35%. Arista is essentially a pure growth play. Their software-driven approach is actively winning the race to provide those massive interconnects that AI clusters absolutely demand to function as a cohesive nervous system. Part 4. Software and application layers, where the value is captured. We are shifting gears now. We're moving up from the physical hardware and the endless miles of networking cables straight into the application layer. This is where user value is finally captured and commercialized in the enterprise space. When you compare Q1 2026 year-over-year revenue growth, you've got Palantir at a massive 85% and SoundHound AI pushing 80 to over 100% growth. This just beautifully showcases the sheer velocity of value creation happening right now at the app layer. Let's zoom in on Palantir Technologies for a second. They boast truly exceptional margins. We're talking 60% adjusted operating margins, fueled by the rapidly accelerating deployment of their U.S. commercial AI platform, or AIP. Their Rule of 40 scores are off the charts. Now, yes, their forward multiples are elevated, but for believers in their platform moat, that accelerating commercial growth rate absolutely justifies it. They're reinvesting heavily to make sure they maintain their edge. And then there's SoundHound AI. Honestly, this might be the hidden gem of the whole group. It's an under-the-radar, pure-play in voice AI for autos and restaurants. They're partnered with massive names like Nvidia and Hyundai. As conversational AI just explodes with new AI agents, SoundHound acts as a really fascinating high-risk, high-reward complement to those safer infrastructure plays we discussed earlier. Which brings us to Part 5, your Diversified AI playbook. Risks, rewards, and valuations. Okay, let's take a step back and summarize how to view this diverse basket of enablers objectively. Because look, when you're looking at this ecosystem, there are inherent market risks you absolutely must consider. Things like high forward valuations, potential execution hurdles, intense competition, macroeconomic slowdowns, and, of course, supply chain constraints. We always want to maintain strict impartiality here by balancing the explosive growth we've discussed with the absolute realities of market dynamics. And remember, none of this is financial advice. So the crucial point is, how do these all actually stack up together? If you look at a summary of these AI enablers, it reveals a fantastic diversified mix. You've got Micron and Broadcom offering reliable dividend profiles alongside massive scale. Vertiv and Arista are pure growth plays with really strong cash flow. Teradyne is practically essential for testing. And then up top in software, Palantir and SoundHound are aggressively reinvesting for application dominance. It really goes to show exactly how diverse this ecosystem truly is. I want to wrap up with this really powerful quote directly from our source material. It says, "The next Nvidia may not be a single name, but a basket of enablers, quietly compounding." I think that perfectly hits the nail on the head. It reinforces the immense value of understanding the full picks and shovels ecosystem we just built together today from the ground up. So I'm going to leave you with this final provocative question to chew on. Which of these enablers is compounding quietly in your portfolio? Because it really is time to fundamentally rethink how we view this AI boom. Look past the flashy headlines, dive into the actual structure, and appreciate the hidden ecosystem making it all possible. Thank you so much for joining me on this explainer. Keep learning, stay focused, and I'll see you next time.